And as always, we're going to be looking for accurate context, good risk management, and always exercising good patience.
Anytime you're talking about fundamentals in a market and direction, fundamentals take a little bit of time to play out.
We got crude oil today, kind of trading yesterday's value area really nicely, low to high.
That's what we're here for, is to put ourselves in the best success. A trading routine does that, builds that habit, lets you know what to work on, what to reflect on, and what to improve on the next day.
Good morning. Welcome to the Market Forecast. Today is Wednesday, April the 27th. Well, we could use a little bit of a wake-up call, a little Ted Nugent cat scratch fever as these markets attempt to scratch and claw themselves off of that loss from yesterday. Good morning, I'm John Hoagland. Thanks for trusting me with your time. If you're already in the markets, hopefully things are going your way. They're certainly presenting to be somewhat of a challenging day for us today, as they always are. Don't forget, we have Top Step Trading Hour today at 2:30. There will be no recap, so join us for Top Step Trading. And we've also got group coaching today. I'm going to put the link in for that as well. That's at 1 p.m. Central today. So lots of good stuff coming at you from Top Step today. Hopefully some good stuff coming at you from the markets. 7:30 this morning, international trade numbers came out. The last release was minus 106 billion, just over that. This time, just over 125 billion. Retail and wholesale inventories both came out at 2.3%. We are waiting for probably the biggest number today as far as economic known numbers. The pending home sales due out at 9 o'clock Central and 9:30, the EIA Petroleum Status Report. Yes, stocks are attempting to scratch and claw their way higher after the tech earnings divergence that we had after the close yesterday between Microsoft and Alphabet. As far as earnings this morning, T-Mobile, mixed numbers. American Tower beating on both, all of these beating on both earnings and revenue. ADP, CME Group, of course, we know that they're doing well. We pay plenty of commissions, and General Dynamics also higher. This afternoon, we're waiting for Meta / Facebook, Qualcomm, PayPal, Ford, and Aflac. So we do have a very long list of earnings, a lot coming out, a lot coming at us, and a lot coming at these markets, including the Russia-Ukraine conflict continues to escalate in many ways. Russia continues to saber rattle, discussing the use of tactical nuclear weapons, and I hope and pray, and I hope we all are hoping and praying that that does not happen. They've cut off natural gas to Poland and Bulgaria. There's talk of crude oil embargoes as well. So we've got crude oil hanging right around 102, 101 bucks this morning, largely holding steady, waiting for apparently new information. The API announced we had added an additional 4 million barrels in crude stocks here in the U.S. last week, and the EIA is expecting a little less than that at about 2 million barrel boost. So lots going on, lots to think about. I implore you, please stay patient. You got to be such good risk managers in these markets. There's lots of opportunities, lots of things to look at, lots of shiny objects for us to jump at. Be patient, be a good risk manager above everything. We want you here tomorrow. We want to see you succeeding. So let's do it. Let's be good risk managers. Always context, always risk management, always patience, and always accepting of information that the market is providing for us. Trade what you see, not what you think. And be patient. Wait for that opportunity when the market finally comes to a level and you say, this is what I've been waiting for all day. And then manage that risk. Nothing is 100% going to work or not going to work at all in these markets. On that note, please make sure you hit the lucky like button, share, comment, question, feedback, heckling, and love are always welcome here on the Market Forecast. Make sure you subscribe to our YouTube channel. You get notifications when we do go live. Again, I'm looking forward to group coaching today. Hopefully we have another good session. Don't forget, you can email in the questions that you have to me, jhoagland at topstep.com. Let me get prepared for them. And then, of course, we've got Top Step Trading, a panel of thousands ready to answer your questions. VIX this morning above 31 at 31.30 last time I checked, but 6% off settlement price from yesterday. Dollar index up another 52-week high, 102.84, and the yield on the 10-year on an uptick today, 2.74%. Got to say good morning. Brian, good morning. First in the room, you win the prize this morning. Dan Trader, good morning. Shaw, Frederico, Scott saw, and he conquered. Jay Crockett, my brother Rick, love you. Terry King, James Swan, Andre, Jackalo, good morning, everyone. Chilling with Dylan. Level 2, good morning, Theo, Spencer, Melk, there's a new name. Welcome to the Market Forecast. Thanks for chiming in and saying good morning. Bill Phillips, Vince, good morning. Expediter Dean, James, looks like level 2 could use some coffee today, and maybe that little wake-up call with a little Ted Nugent was going to help everybody. Thought maybe we'd get us all charged up a little bit. Chris Johnson, Jake Moore, good morning. Spencer, barely woke up. I see now you got to get your coffee. Brody, morning. Mike, Jerry is awake, and John is too, I hope. Devont, Alfred, good morning. Let the sun shine in. Tachyon, good morning. Frederico, Tachyon up a little bit, done for the day. Nice job. Jerry, yep. Cat scratch fever. Nobody wants me singing anything, Expediter Dean. Vince, rocking out. And I needed that. Now having your coffee, LT. I guess you were up late last night. Cheryl, good morning. Rusty Golfer, and that should be my name. The Nuge, yep. Trading Research, good morning. J Trades. Frederico, we would need the United States and Europe to stand against Russia, and a lot of prayers. Who would have thought Crude CL would become a meme stock? Well, you remember 2 years ago when it went to negative 40. They tell you it can't go to zero. Don't believe them. Jay, good morning. James Swan. Me and the market had another word and decided I would just stick to the practice for now. Well, James, it's okay as long as you are purposeful and deliberate in that practice. Trade that practice account like it matters, like it counts. So the thing about a sim account is it's easier to make tough decisions because there's no accountability, no consequence, no rules. Just try and trade your strategy in that practice account. Stephen C, ZK, PD, good to see you again. Dr. VJ, Joe Drinden, good morning. Frederico of Europe. Yeah, well, it's going to take the whole village, I think, to beat this. Frederico. Good morning. If you are new to the Market Forecast, thanks for coming. Thanks for chiming in. It's good to see everybody. Always like to say good morning to everybody, and I love it when people say good morning to me. We are going to jump into the charts here now. There's a lot to look at, lots to think of. And Spencer is having his coffee. All is right with the world. I'm going to have a sip of mine, and we'll jump into the charts. Starting with the E-mini S&Ps. We got our equities holding on to some overnight gains. Hopefully we're going to be able to pull this thing out. And good morning, Marcelo. All right, let's jump in. All right, here is the daily. April in the S&Ps remains an inside month. We've got the high from April up here. We've got March high and March low marked in red here. We really took a stab at that lower level yesterday on that push to the downside. Volume came off a little bit yesterday. We still added approximately 12,000 in open interest. So it seems like money is still betting on the short side. New shorts. If we get too short, we may see this market pull back. We know that the S&Ps have a tendency to do that, especially to retail traders. When we all jump in at the bottom and get too short, the market turns around and rips us to the upside. The weekly chart, we're not going to put it up here, but the weekly chart, you can just see it here, is still one time framing higher. Lower highs, lower lows, lower highs, lower lows. We've had an acceleration in the last week and approximately about the last week to the downside. Settlement, we were talking about this on the recap yesterday. Settlement in the S&Ps is 4170.50. 4170 is weekly kickoff low. That's the level where I'm looking for longer time frame traders to need to or be forced to adjust inventory. Look at what we have here. Let me see this. I don't know why this is acting so slow. I have new computers on order. They're not shipped. I'm a victim of supply chain. So we had this. This is crazy. So we had this trend line from up here, 2 points of contact here, a point of contact here. We broke out above it. Look what happened yesterday. We traded right back down to it. This is something that happens. Some support levels, some resistance levels, some trend lines are effective from both sides of the market. The market targeted it to the downside yesterday, didn't really offer an opportunity, but now we've got a little bit of recovery off that level. So again, we are working in and around weekly kickoff low. This is an important level. I don't know what's going to happen. If I did know what was going to happen, I would tell you, and we would all make some money on this. I can't do that. I don't know what's going to happen. Take a look at the 30-minute chart here. See if that provides any opportunity or any clarity for us, and it may. Okay, so we've been having a lot of late spikes lately. We had a late spike to the upside yesterday, the day before yesterday, that we opened below and we pushed lower. Now we've got a late spike to the downside that really has two interesting levels, if you ask me. When we're looking at the TPO charts, and I'm going to try not to slow down this computer anymore here. Okay. When we're looking at the profile, each 30-minute bar, each tick in every 30-minute bar is issued a letter. We have the L breakout down below the previous area of balance, as well as the day before's low. So this level right here looks interesting to me, and it's right around 41.94. The L breakout is where we really started to break out of the balance area. Then there's the M period breakout, which is down here, which is 41.83, and it's also the value area low from yesterday. You can see where we're trading right now. We're trading between the two. This looks like a very interesting area for me. Either level looks like an interesting area for an execution, and I think we might be able to find some fish in those areas. Remember, the late spikes opening below or inside the late spike can be an indication of acceptance of lower pricing. Back to the 30-minute chart. So here's that value area low. Okay, this 41.83. We open between those. I'm going to try and stay patient. I'm going to be looking for executions upon acceptance below 41.83 and upon a potential move back up to this 41.94 L period breakout. We got to remember, though, we're inside range and inside value, so we're going to try and stay a little bit patient. I don't know if the market's going to give us the opportunity early or later in the session, but opening inside range tends to offer better trade locations as the day goes on. It's going to be a challenging day. ACH, anything can happen. We are opening right now with the potential of opening inside a late spike, which can be an indication of lower pricing being accepted. Opening below the late spike is a stronger indication, of course, that lower pricing is being accepted. So, this is it's a bit of a pickle. It's a what's the word I'm looking for? It's a puzzle, and we can never really quite complete or finish the puzzle. It's an enigma. We have to trade against levels we can limit risk, and these two levels, the L breakout and M breakout, again 41.94 and 41.83, I think offer us good opportunities to only lose a little bit. It's like criteria number one for me if I'm taking a trade is how much do I have to risk to find out I'm wrong? And those two levels, I think, offer those opportunities to only lose a little bit. We get the market and it starts heading our way, we may be onto something. Yeah, conundrum. Yes, Carlos, there is a lot of talk of escalation in Europe, and please continue to pray for peace. All right, gold consolidation continues. We just continue to bounce back and forth between the highs and lows of this pennant formation. Volume has been holding up pretty well for the last couple of sessions. We added 6,000 contracts in open interest yesterday, but right in the middle of the range. Our little tennis player is back to center court, ready to take the volley if it comes up higher or lower. We're in short time frame control. It seems as though this market is just kind of awaiting solid information, and maybe some of that information will come in the EIA at 9:30 Central today. And with escalation in Europe, anything, again, ACH, anything can happen. Take a look at the 30. We're already past the opening range here. Let's see if we've got any good opportunities. So no overnight inventory. Overnight inventory was largely flat. Settlement is $101.70. We are in the middle of the value area. We're in the middle of the range from yesterday. I'm going to probably be sitting back on my laurels looking for information or opportunities as the day goes on. We opened in range and value. That tends to offer better trade locations later on in the session. Again, waiting for EIA, that might be something that would be beneficial. Although it seems as though the market goes the opposite direction of whatever fundamental information the IEA provides. Wait for the knee jerks and trade the extremes of the knee jerks if you're going to be looking for some opportunities there. So much uncertainty in Europe. EIA is expecting a 2 million barrel boost after the API announced a 4 million barrel boost in crude stocks here in the U.S. yesterday. Seems to be waiting for new information. Let's see if the opening range did offer anything for us. We looked above. We're about to look below. Opening range, moot. We have the opening range at the high yesterday. I am going to have to update this computer. No, opening range initially, I think, was the high of the session. We did take it out at one point. Be patient in crude oil this morning. Nasdaq. All right, Nasdaq, a little bit different. We did take out the March low yesterday. We did close below weekly kickoff low. The market, the settlement was 13,016. So currently we are down according to the settlement price today. Here's March's low. Okay, we've got this trend line here showing that we've been putting in lower lows, and we did take out March's low yesterday. Markets again are trying to dig themselves out of this hole. We lost 1,600 in open interest on this move to the downside, so that is suggesting that we are not getting too short to continue lower. Looking at the S&Ps, it almost looks like we might be getting too short to continue lower. Not so much in the Nasdaq. Nasdaq is waiting for Microsoft, Meta to come out after the close today as well. Here's the 30-minute chart. We have another late spike. Here's settlement. Okay, 13,030 is weekly kickoff low. Again, that's a level that I look for longer time frame traders to be forced to adjust inventory, and we're going to have to see if that happens here today and then for the rest of the week, because we do have some play with that level. This is crazy with these charts. Settlement down here again, 13,016. We did close below that level. We've got a late spike here as well. We've got the L breakout right here, which is 13,062. We've got the M breakout. Oh, this is crazy. I'm going to have to close and update this computer before tomorrow morning's forecast. Okay, here we go. Let's cooperate. This is crazy. The M base down here, 13,006. Where are we now? 13,007. 13,007. Oh, this is crazy. So if we were to open now, I would say we would be opening in the late spike, which would lead me to believe that we should be accepting prices lower. Where does that break? I think it breaks if we take out the L period breakout. Again, that level is 13,062. And certainly if we get back into range here from the area of balance that we spent most of the day in yesterday, value low, all of these levels are somewhat important. This is a finished naked point of control that we reached yesterday. I'll take that off later. I don't want to monkey with these charts too much. So again, opening in the late spike indicates possible acceptance of lower pricing. You've got two levels again, 13,006, 13,006, 13,006, and 13,062 offer levels to manage risk against if we get the opportunity. Yes. Now we got the TRS 386, the trash 86. Yeah, still using that, Rick. I wish Tom was here. We'd be talking about the Sinclair ZX81. All right, here's gold. Downside digestion seems to be continuing. We did take a nice little stab down to this low here from the 24th of February, which is 1882. There's a hell of a TV show, I think, by that same name, 1882, something like that. In the overnight, we took a look at it overnight. We've got our swing low from over here, which we tested down to a couple of days ago. We're trying to see if we can find some acceptance down below that. This 1882 would probably be a pretty good guess for a weekly kickoff level, because we've already taken out our weekly kickoff low here in 1924 on Monday. Well, that's what we're looking for. We're looking for the market to make a market change adjustment at these weekly kickoff levels. And we went through this area of consolidation very quickly and accelerated into Monday. What does this look like today? Overnights, we've got some shorts in this market. Opening range, I don't think was neither the high nor the low. The high of the 730 bar, it basically settlement and point of control from yesterday. That kind of gives us an idea of we're probably still going to be looking for the opportunity to try and sell strength. We've traded down to a point of control from a couple of days ago. We've got another naked point of control just down below that with which to target for visually. If we continue to take out these visuals, the 1882 would be a really interesting area for me to look for an opportunity. I would call that my dream level today, our overnight low / 1882. Let's take a look at the euro now. We know that the dollar continues to put up higher highs here in the 52-week time frame. Over other time framing activity continues. This market is barreling to the downside. Only adding about 200 in open interest yesterday on a little bit lower volume. It's only 812. We're going to beat the volume yesterday today, and I'm going to be very interested to see if we continue to bring in open interest or if we start to see some capitulation, some long liquidations, some of the traders that are still holding on to longs here getting out. If that's the case, we reduce open interest, then I'll look for potentially a change in direction, at least a short time frame change in direction. But the last thing I want to do is try and fight this directional market. The volume is okay yesterday. Only adding 200 in open interest might be an indication that the market isn't doing all that well on this auction to the downside, but it certainly doesn't look like that today. Volume is maintained. Open interest has been higher, but seems to be slowing. Here's the 30. So this level here, this 10671, 10671, was a swing low from a couple of years ago, from March of 2020. It offered a little bit of support for us yesterday. Last night, it became resistance. We're seeing this market continue in this push to the downside. Settlements up here. We know we have overnight inventory to the short side. That overnight inventory is continuing to get paid. We've been one-time framing lower since we last checked this high of this area of balance. So 1, 2, 3, 4, 5, 2.5 hours we've been one-time framing lower, and I don't want to fight this. I don't want to fight a market that is directional like this. I'm going to be looking for opportunities for it to perhaps later on in the session find some sort of structure with which to lean on to offer, again, risk management. I don't want to lose a lot on any trade I'm going to take today. And if I try and start to pick bottoms in this, I can lose money all day long and pick myself to ribbons. I don't want to do that. So I'm not going to be looking for longs. If I feel like I've missed the trade to the downside, I'm going to have to be okay with that. I don't want to succumb to FOMO in this. And I also don't want to pick bottoms. So it's kind of hands off for me right now unless we start to build some sort of structure that I can lean on to limit risk for perhaps a move to the opposite direction. Is this market due for it? I mean, we've been barreling to the downside for some time. At some point, we're going to find a level that we're going to be looking to take some profits on shorts. And that's when we may get to face rip and rally. But I don't know that I'm smart enough, fast enough, or even have enough experience to pick it well enough to limit the risk so that I can, catch it. If we find some sort of structure that offers us a cheap entry, I might think about taking that later on. But one of the big mistakes that that retail traders make is always trying to pick bottoms. I'm really good at picking bottoms and taking 5, 6, 7, 8 losses in a row before I give up. And then when I give up, that's usually when the low is put in. 10-year. There's the 30. We putting in a bear flag here. Boom. We saw rates falling off a little bit. They seem to be upticking again. We know a week from today we're going to get a boost in interest rates. It's a matter of timing. 1 week to the FOMC meeting, ladies and gentlemen. Are we creating a bear flag here? Take a look at the 30-minute chart. We're going to take a look at the bottom channel of that. 1, 2, 1, 2, 3-ish. Points of contact here, a little bit of a look down. This bull flag, if we accept down below this level, this trend line, we could see a big move to the downside. Okay, taking a look back at the daily, we've come a long way in a short period of time. Bear flag, boom. Bear flag, boom. Bear flag, boom. Something I'll be keeping an eye on today to see if we get any play with that trend line, the lower channel of the bear flag. And for the nat gas, we've had some information coming from Europe. The nat gas has been just screaming to the upside as far as European natural gas, of course. Eventually this is going to at some point bleed over into our markets here. Especially if we start providing that gas in Europe. All of these things are unknowns, and we really have to be careful trading these. Yesterday on high volume, we lost 15,000 in open interest. Now that is probably largely due to rollover. Okay, I think the May contract expires either today or tomorrow, so we won't have to worry about that anymore. But that loss in open interest wasn't necessarily short stuck in the hole. It was more liquidation of contracts due to rollover. So again, we don't have that benefit here. European uncertainty is right. Is this market kind of holding its breath? We've got weekly kickoff high. We've got weekly kickoff low. We're right in the middle. Our little tennis player is holding in the center of the court, ready to volley if price goes up here or if price goes down here. It just makes me feel like this market is just kind of waiting with bated breath as to what is going to happen. Settlement here, opening price last night here. We know we've got some longs in this market in short time frame. Right now, it appears that they are continuing to get paid. We took out the overnight high. We've taken out yesterday's high. We took out the night before's high. The market appears to be somewhat buoyant here, and I don't want to fight that. So I think the markets that we're seeing the most clarity in are the equities with the late spikes in any market with that's providing a gap. Anything that's inside range and value today, I'm going to keep on the back burner and look for opportunities as the day goes. All right. I might trash 80 out. You guys. Should I look for the gap to close from the overnight? Well, gaps to me, ZK, are regular trading session to regular trading session, regular trading hours to regular trading hours. Weekend gaps, sometimes there's some good information from the overnight gaps in those as well. They don't make them like they used to. Pretty hardcore PC. Yeah. That computer isn't going to pull it off, right? I have an extra ZX81 for you if that'll help. No, I don't trade on that thing. Of course not ZX or ZK. I have a dedicated computer with which I take trades on. Yeah, I wouldn't now. That's true. Charles, you're right. Yeah, not now. I'm not. All right. Well, let's take our deep breath. Stay humble, grateful, and creative today. Say a prayer for peace. Manage risk today, and we'll see you group coaching at 1 and top step top step trading hour at 2:30. Be ready. Get psyched. I'll see you in the pit in about a couple of minutes. The proverbial trading pit. A dedicated computer with a floppy disk drive. All right, get out there and profit today. We're looking forward to your success. Be good to yourself, be good to others, and keep praying for peace. Have a great trading day. I'll see you at 1 o'clock for group coaching. Little fog hat for us to end the forecast this morning. Trade well today.